Welcome back, everybody, to another market day. I am your designated Inquirer for today. My name is Axel, and today is 10/14 of 2020. Now, quite a few things happened, or rather did not happen today. There was further no action on stimulus, and so the market decided to take that as a reason to go lower. It's not terribly surprising. It's exactly as what is expected. How far could it go? Well, it could go back down to this point of control over here. It did bounce off of the VWAP, which is this orange line right here, and could fall down to this area right here, which is at 11,525 for the NASDAQ 100. Now, since the close, there has been minor price action, generally a little bit to the lower side, very minimally. There probably isn't a whole lot more that Mnuchin and Pelosi and McConnell can do at this point to keep hope alive that some sort of stimulus will get passed before the election. And so we're going to get at least a couple weeks of incredibly terrible jobs numbers and credit card data and everything else. So these next couple weeks are probably going to be really, really bad every Friday till the election, and or till we get basically stimulus, which could be for a good 3 months if we're lucky. Because if we basically have inauguration and a stimulus ready to go on day one, then it gives us a better shot at being a productive nation rather than waiting till March or the end of the first quarter for 2021. But we'll see, because we don't even know yet how the election is going to go. That's also decidedly if there is what is expected to take place, which is a blue wave, where it may have been harder for the polls to get right in terms of like the presidential election in particular, which is a single race, a single data point that ends up coming out of the election, rather than a general prognostication of what the rest of the country is going to do in terms of elected leaders and all this other sort of stuff. Generally, the polls were more or less right, and also including the polls for the midterms. So if we take at least 2 out of the 3 prognostications of what's probably going to happen, it's possible that you could more than likely that you can have the House retain in Democrat leadership. The Senate may be able to flip, and we have the presidency that may be able to go for Biden. The thing that's different today than it was back then was that there is voting going on in substantial numbers right now versus 2016. And as the polls show, the sentiment is still very much on the side of Biden being able to win. So he may be able to solidify what was potentially a vote ahead of time rather than on November 3rd. Because on November 3rd, we also do expect there to be quite a few cases of chaos, rather. How it might present itself remains to be seen. In any case, right now, in terms of what we're expecting for the relative market, we have shifted to negative momentum on the 5-minute. Let's go to the 2-hour here. 2-hour, we are moving into negative momentum as well. We do have a clear sell signal from yesterday that has continued on to today, and will probably continue on till tomorrow. Tomorrow will be more than likely if we stay negative overnight, it will carry on into the morning and we will have a negative momentum day, possibly. Where tomorrow we can go into an oversold condition, possibly, depending on how it is that we reach that position. And could be, yeah, it could be that we stay there for a little while, considering the kind of turnaround that we're having right now and the variables and the factors that are at play. Take a look at the dollar, sign DXY. We have a rising dollar. From the opening of this morning, it did drop overnight. Had it rise yesterday, drop, but what happened, generally speaking, what we have here is we're always going to have ups and downs. It's whether or not the ups and the downs are kind of sustainable. There we go. Sorry. Whether or not it is sustainable, in that you can have a high be made, a low be made, but whether or not it's higher than the previous low is what's important. Whether or not this can carry on further to a higher high is the part that's important. Because here we basically had a little bit of a negative trend happening here, where that negative trend was pretty much broken here and kind of bounced off of the higher bound portion of that downward trajectory. So, and we also have a cross to the positive side over here. We could have another cross here to on the 200 2-hour line, and so on and so forth. So it can happen, it's possible. So yeah, that's basically it for the dollar. Take a look at TLT, which is the 20-year bond. Here we did have it open high, close lower, to basically close the gap here. We do have a cross of a few lines here, where this line is the 30 length, depending on what period you're using. It'll be 32-hour lengths, 30 days, etc. So depending on what time scale you're using. So in this case, we have the 30 crossover quite a few lines here, including the 200. So that is somewhat significant here. We may be crossing up into the upper point of control for last month. It could be a general case of what could happen, and maybe move higher from there. We don't exactly know yet. We would have to cross 167 for that to be the case, for us to make our way basically to 171. But if that is the case, we will most likely see significant dips in the stock market. The VIX here actually kind of tells us that we have been creeping down into the 25s recently, and we did hit this basically buying area, or would be called a demand zone, where not to the top is called a supply zone. I think maybe getting that wrong in particular as to how I'm describing it, but it's what it means is that it describes an area where there is demand and or where there is an excess of supply. So where people would tend to buy and where people tend to sell. In this case right here, the VIX has found more or less support at 24 in the 25 area, and is moving up from there to where it closed right now, which is 26.4. It can pretty easily maybe move up into through the 28s and up to 30, and we'll see whether or not it decides to pass this 30.54 area. which is the next supply zone, which could be where we encounter sellers again of the VIX, and or we don't. If we don't and we carry on higher, this could mean still another factor that points to a more tumultuous and a more severe dip in the market in general. Now let's look at, we've seen the dollar, we've seen bonds, we've seen, let's look real fast, /BTC. For BTC, we've got a decreasing negative momentum on the 2-hour here after this jump that we had. So it could probably more than likely be the case that we drop back down to this point of control over here. I don't think that we're going to be seeing it remain up here. The reason why it might remain up there versus like say gold or other commodities is the instability in what we perceive to be a smooth and or not smooth transfer of power. If we see that the world is getting more hectic still, in that the dollar is in danger of being a trusted source of value, then we can see gold and Bitcoin basically keep climbing in the face of a rising dollar, possibly, and or a dipping dollar, or a rising and or dipping yield from the bonds. Generally, those, a drop and or a rising dollar, a drop in yield, a rising dollar would generally mean a dip in gold and or Bitcoin. But in this case, because of the fear of it being, of the dollar not being a place to store value, because we don't know what the government is going to do and or whether or not it will pay its debts because of conflict, then that confidence diminishes and the value of the dollar drops relative to other currencies. So that may make basically Bitcoin and gold more valuable, as we would have to exchange it. If we want to retain value, have to exchange it for other currencies. That's where you have your hyperinflation. That's where you have a lot of stuff that happens that could be really bad. In any case, yeah, that's basically everything. I hope you guys had a good Wednesday. I will catch you guys again tomorrow. Until then, stay safe, stay healthy. Yeah, take care. Bye.